All right. Hello, everyone. Can people just put in the comments if they're able to hear me and everything sounds okay? We'll give everyone a couple minutes to get settled just to make sure. All right. Comments coming through. Sounds great. Excellent. We're going to go ahead and get started. I'm sure some people are still trickling in, but my name's Ian Blanke. I am the Director of Brokerage Services here at EdgeClear. You're all here to learn a little bit more about the event-based contracts. First things first, trading derivatives carries a high degree of risk. It may not be suitable for all investors. Past performance, of course, is not indicative of future results. I'm going to bring in our guest. You probably know him if you're attending this, but if not, his name's Morad, Futures Trader 71 online. He is the founder of EdgeClear, and he's going to be joining me today to talk a little bit about these event-based contracts. So let's bring him on in. Morad.
Hey, and thanks for having me on.
Of course. How are you? Thanks for joining.
Absolutely. This is pretty exciting. We have some exciting stuff to talk about today, so let's just get rolling.
Absolutely. So I've got a few questions for you. We're going to do a little Q&A style for our audience. I know these things, of course, but I feel like you're much better at explaining than most normal people. So first things first, what are these event contracts?
So event contracts are cash-based agreements or contracts that are based on an event at some point in the future, and the event's limited to today's settlement. So, an example of this is, will the ES close above 36.25 today? Yes or no? And what's happening is throughout the morning, from the time the market opens at 6 p.m. Eastern U.S. time until the product is settled, the value of that contract is going up and down with the market. And we have these settlement contracts, these event contracts exist across many markets. You can trade them on various strike prices or settlement prices on the S&P 500, the NASDAQ 100, the Russell 2000, the Dow, gold, silver, copper, crude, natural gas, and the euro currency. And we'll show examples of that today. And that's what they are. In a nutshell, you are placing a trade based on your prediction of what the settlement price will be in the now moment. And the now price changes with the market.
Cool. So pretty basic. I mean, as everything gets closer or further away, then the value of those products changes. You can basically decide yes or no whether you think that is still viable or if the market's going to maybe move below that price. One thing before we get into a little more detail on the event-based stuff, we have our Polling for Charity program. I wanted to talk about this kind of now and then towards the end as well, just to remind people. So can you just talk about what EdgeClear's Polling for Charity program is? That's what this is all about for everyone who's watching and listening. Here at EdgeClear, we like to give back and do things for great causes. So I'll let Morad get into it a little bit more.
Yeah, what excites me about this, I mean, clearly you can find information from about the event contracts from EdgeClear's own website, which is itrade.events, or CME Group's website. But what gets me excited, and the reason we're doing this event, is because last year we did a fundraiser for St. Jude. St. Jude Children's Research Hospital, which is an organization that I believe in very strongly. I've been supporting them for quite some time now, and it's what we're doing is we are looking to involve you, the trader, in deciding on a set number of strikes. So the way it'll work is we've opened an account at EdgeClear. We've deposited $10,000, real money, no simulation here. real money, $10,000, and our goal is to grow that account. And we may not be able to successfully grow it because of the method we're using. It's a democratic approach to grow it. And whatever the balance is, if we're able to get the balance over $10,000, let's say we finish up the end of the year, the last trading day of the year is December 30th, 2022. Whatever that balance is, we're going to write a check. EdgeClear is going to write a check for that amount and send it to St. Jude to support its services for children, sick children. And so, if it's less than that, it's fine. And then your role, the challenge, the Polling for Charity challenge, is for you to come in at a specified time and vote on whether we should buy or should say yes or no to 5 different products. Those are the ES, the NQ, the Russell 2000, the RTY, crude oil, and the 6E. We'd want you to vote on each one of those. The majority vote wins. We will put a position on based on how everybody saw it. So I'll give you an example. This is what it kind of looks like if you can share that screen.
Yeah, of course.
Ian. So, for example, we have, the S&P down here at the bottom left is trading at 36.25. This is Rhythmic's web-based platform. Where the S&P right now is trading at 36.02 and a half, 36.02 even. So we're looking at the 36.25 strike. So we'll decide on the strike for each one of these contracts right at the beginning of the polling period. The polling period is going to be on Tuesdays and Thursdays from 9 a.m. Central Eastern till 9:30 Eastern during the daily live Trader Bite. So we'll be doing this live with everybody watching. We're going to look for the strike that is closest to where the market is, and we're going to ask you, do you believe today will settle higher or lower than where we are now? In other words, higher or lower than where the settlement price or the strike price is. And based on your vote, we'll put on a trade. There are rules to the trade because we're traders. We're not going to just helter-skelter buy and sell. We're going to set some rules, just like every trader should have with their trades. And those rules are: we're looking for at least a 1-hour return. So if you look at this right now, will the ESZ2 settle above 36.25? The price for anybody that believes it'll settle above 36.25 is $3.75. If it does settle above 36.25, so if I expect that the market will likely bounce and finish above 36.25 today, I'll bring your attention to the fact that the point of control currently is 36.26. If it closes above there, then if we paid $3.75 or $4, we would get paid $20 back. We paid $4, so we bank $16 minus fees. Okay, we'll go over the fees and stuff in a minute. They're shown on the screen, but we'll talk about that in a minute. So right there, that's a 4R trade. We're risking for every dollar we're risking, we have a potential for 4 times that. And that's what we're looking for. What we don't want to do is go to a strike that's already in the money, right? Like, will it close above 35.50 today? Well, if I believe it'll close above 35.50 and it's trading at 36.02, it's already in the money. So if I pay $20, my return is 0. I wouldn't want to put that trade on, right? So we're looking for $10 payout for $10 fee, or somewhere, we might go for $11 on a $9 payout, maybe sometimes it's special circumstances. But in my opinion, trading, you have to have a favorable risk factor. You have to be getting more for your money than what you're risking. And so that's how we'll do it. So currently, hey, will it close above 3,600? If we believe it'll close above 3,600, it's trading at 36.02. So right on the cusp here, we'll pay up $11 to make $9. That may be a trade we'll put on. And then the same thing for the NQ. NQ is trading at 10,968. The 750, if it closes above, we have to pay $19 for a dollar of profit. But if we're looking at the 11,000 strike, we would pay $2 to finish at 18 bucks. So if this thing pushes up and finishes, pushes up 31 and a half points and settles above there, has to settle a tick above there. If it settles above there, we'll get paid $18 for for $2 worth of risk. And that's how these work.
And that's all pre-market, right? So the voting will be, close of the trader bite, we'll decide, put the trade in, and then that's that.
Yeah, I'll show this exact screen. You'll see me click the button. You'll see me confirm the trade. The trade goes into our live account. We don't touch it. We don't close it mid-session. We don't take profits or anything at all. And we will, wherever we end up on the 5 products, that's what goes into our account or gets taken out of our account. And then we'll keep doing that every Tuesday and Thursday. And we'd want you to participate because this is about you and us working together to raise money for St. Jude's.
Absolutely. It's a great cause and an awesome event. A ton of fun. Even if people are just kind of watching the trader bite to gather information, just throw a vote in there and, test your analysis abilities.
Yeah. So the voting page, just to take this a step further, the voting page is on EdgeClear's site. We will share this link with you. There's a details tab. This tab explains everything that goes into this, the charity, the rules. We need a minimum of 200 votes to put in a trade. We need a 1 hour risk reward, and we'll hold it till the close, and then the trade must be on or before the cash opens. So we're trading right before the open. The voting looks like this. So you would be sent to this voting page here, and you would simply be given a strike. So the strike is going to change every day, and so it'll show up here. Maybe it'll say, will the ES settle above 36.25? And your vote will be yes. On the NQ, maybe no, yes, no, whatever. And you hit submit, and then those votes are recorded, and then everybody will be able to see. Well, there are no votes in, so it won't show you the results, but we'll be able to see what the results are and place the trades based on that. So it doesn't really, oh, there you go. So it doesn't really cost you anything. You'll notice that the form is not collecting your name or phone number or email. And this is just something that that helps us understand how these event contracts work, plus help those who are in need. So it's a win-win all around.
Absolutely. Cool. All right, I'm going to take your screen off, Morad. Let's
Sure.
get a little bit into the nitty gritty, and we'll revisit this towards the end about why people should get into these, or why you would. Right. So my next question for you is, why would you trade the event contracts? You, or why should anyone else trade them?
So when these first came out, until I was able to look at a screen, it was hard to understand how they would work. But essentially, what this is it's a cash-based product. So there's no leverage. So there's no real opportunity of losing, unless something goes dramatically wrong, of losing more than the $20. So the max you'll lose is $20 on these. It's a cash product. So that takes away the risk of leverage trading, like in an option or a future. And it's very clear. I mean, you saw on that screen, it shows you, here's what you pay, and here's your max profit. So you don't need to figure out a stop. You don't need to have an opinion that is very technical with a market that may be volatile. The more volatile the market, I think, the better the event contracts, or the more it makes sense to trade these event contracts, because in general, most people have an opinion, and a lot of times we get caught up in the fact that we're getting stopped out. So I can come into today and say, wow, the market's really bullish, and I expect that we will likely close positive on the day, right? And so the market settled on Friday, the S&P settled on Friday around 3650. And I expect it to finish positive on the day. So I'll go to that settlement strike of 3650. With the market trading at 3600 now, that strike probably costs 25 cents to buy, and there's a potential that it could close positive, and let's say it does. If it does, then I paid 25 cents to get $20 or a $19.75 return minus fees, but I never have to worry about the fact that it went to 3600 and it jiggled around and it went up my way and then it came back down, and I don't have to participate in the tick drama and in everything that goes on throughout the day. I'm participating in a very clear end goal, and that is, look, the market's either going to close above here or not. What is my maximum risk? My maximum risk is the amount that I'm paying for that settlement, for my prediction, and that's it. Minus fees. There's always fees, but that's it. So if I pick up a 25-cent option and it doesn't go anywhere, so I'm taking this huge bet right now. Settlement price at 36.50. I expect the market to finish positive on the day. There's a lot of technical stuff that we can do to determine how probable that is based on historical data. Past performance is not necessarily indicative of future results. But at the end of the day, I just needed a tick above 36.50. That's it. It doesn't matter to me that it went to 36.66 or 3,700 or 15,000. I just needed a tick above. So I paid 25 cents plus fees, so it might cost me maybe 45 cents to participate, right? And that's it. That's it. I don't have to worry about it. There's no stop loss to worry about. There's no data issues to worry about. The exchange is going to decide where settlement is in the last 30 seconds of trading or whatever it is, depending on the product. And I get paid or I don't, or I lost 25 cents. And I can trade as many of these as I want, as I have cash in my account.
Yeah.
So the risk to reward.
Yeah.
Yeah.
That leads into a question, and you can talk about the risk reward too on this, but how are these different from binary options?
So binary options are basically the same thing. However, binary options have a bad reputation because there was a period of time where binary options were all the rage, and I don't know this firsthand, but what I had heard is that that sort of approach was abused. The intent of event contracts is to really provide a low-cost way to participate in very, very popular products. So if you look at the products that are in this, they are some of the biggest products that the CME offers. And to me, binary options are, will Hillary Clinton or Trump win? Will it rain in San Francisco tomorrow? Which is all well and good, but we're professional traders. We're in the markets. We want to have this be on a regulated exchange. Someone who's not taking the opposite side of our trades, right? The CME doesn't take the opposite side of our trades. It's a fair game. There's no playing around with there's no playing around with or manipulation of pricing, and they're on products that we are very familiar with. So I think binary options are, that's something that people do. I'm not someone who gambles or bets on sports teams or whatever. But this is on instruments that you can actually do technical analysis on to come up with probabilities of some event happening, and that includes where they might close or settle.
Sure. Makes sense. I mean, this next question is in the same vein, right? But there's obviously rules and regulations against binary options in certain part of the world. I think the UK, right? Although you can do spread betting in the UK, a little bit different. I'll leave that for a podcast or something to discuss. But why would you or the exchange go against these rules and regulations around binary options in other countries?
So the regulations, I think, are based on, again, I don't have the inside track on this. I've tried to find information. I've asked around as to why this type of product it cannot be traded in the UK, for example. And again, it goes back to a history where these products were offered by private businesses that may or may not have manipulated strike prices in the last minute, at the closing minute, and pushing a lot of people out. And so this is so they gave this kind of approach a bad name. All an event contract is it's a call option with 0 days to expiration. That's it. You can do this exact trade by telling your clearing firm to enable a call option and put option buying, just buying, and you can put these trades on your own. But what the CME has done is they have simplified that process. There's no enablement of options, which requires more due diligence by the clearing firms. Options carry additional risk and things like that. And they made it a cash product, and it's very simple. It's thumbs up, thumbs down. You have your risk reward right on the screen. It's a product you're familiar with, and that's it. To me, there's a lot less risk of loss on an event contract than there would be trading a micro on that same product, because a micro can keep going and going and going against you until a broker says, boop, you're liquidated. These have a very definite end in terms of when they stop trading, and they have a very definite end in terms of where your loss is.
Right. So while some of the other underlying options components are still involved, you're not buying a call on the E-mini S&P 3625 strike that expires a month from now, right? Which,
Correct.
that's capital that you've already spent. You bought the call, it's cash, but a lot can happen in between now and a
Well,
month
not
from
only
now.
that, you may have liquidity issues.
Right.
You may not be able to get them because there's just nobody on the other side. Like, we
Right.
don't have to worry about any of that
Right.
with this. Anybody has access to this. You can do it on a mobile device. You can do it on a web platform. You don't have to have a full charting system. It's very, very simple, in my opinion.
Yeah, absolutely. That brings me into my next question, actually, which is, what type of trader would be best suited for event contracts, in your opinion? Even though we don't have to have that charting platform and stuff in front of us, if I'm someone like myself, for example, pretty busy throughout the day doing other things, if I want to take a stance on something, it actually might be easier for me to go in and buy one of these versus trying to trade throughout the day, right? And I still have all of my charting up and everything like that throughout the day.
Yeah, and that makes sense. Like, this is for someone who can't sit and watch the market or watch your position all day long. You can put, in fact, you can put your event contract trade on as soon as the exchange opens. The new strike prices are announced right after the close, shortly after the close. So you get a new series of strikes that change, the increment of which changes based on where we are, and you can put these on at 6 p.m. yesterday for today's settlement. You don't have to be here. You don't have to watch your position, and you can look. You don't have to put them on, like for our charity polling for charity challenge. We're putting it per product on one strike. But as a professional trader looking at these, I can see some real edge to stocking several different prices, and my expectation of settlement changes as the day goes on. So I can see that it's a trend day up. I can see that it's well below the 3650 strike, but I can tell that we broke out of balance and we're strongly moving in that direction. And I can go in early and grab a thumbs up on closing above 3650
Sure.
with 12 hours remaining to trade on a trend day up, and that trade might cost me 25 cents for a $19.75 net payout. This is how a professional would look at it. What's the probability of a market closing above that strike? And we can compute that through historical volatility, and we could see that this is something we'll put on, and I can go on about my day. I don't have to sit here and go, well, it broke this and it did that, and hey, I got stopped out, but it ended up going
above your strike.
above my strike. I don't have to worry about that. I don't have to watch my screen. It's not a replacement for my day-to-day trading, but it certainly makes it so that it's what everybody needs. Something some way to profit on an opinion with a clearly defined risk reward, which is the biggest piece, and a product that is just simple, right? It's very simple. I see the price, I click on it, it's done, and I can move on. I don't have to worry about it anymore. I don't have to manage a trade, right?
Yeah. And we'll get to, I see people are asking questions. We'll get to those towards the end. There is one that I wanted to address now since we're talking about them already, which would be, what is the max loss on this? And really the max loss, if you took a bet that, let's say the market's trading above 3,600, the yes is going to cost you $19.75 or $20 to get into.
$20 most
which
likely.
I don't know why you'd want to enter the trade, but then if it doesn't settle there, then you lost that money, and you've already paid that money anyway. So these contracts in particular, it doesn't make much sense.
Well, let me correct you here, Ian, for a second. If let's say currently the S&P is trading at 3611, let's say I decide the market's going to close above 3600 and I pay $20. Well, what I'm actually going to lose is the fees. Because the exchange is going to pay me back $20, because you're always going to get paid $20 if you're in the money, or you're going to lose whatever it is you paid for that option. So in that situation, I'm losing fees. So I can take an opinion that, yeah, it'll close above 3,600, pay $20, wait till the end of the day, yay, it closed above, get $20 back minus fees, which people can do. I'm happy for you to do that, but there's no edge. There's no edge. There's no way to make money on that, right?
Yeah. That's absolutely correct. So let's get a little more into the nitty gritty of, we've already sort of covered this, but how they work, right? So I'm seeing these strikes on the screen. I can see my max profit, my max loss. I can say thumbs up or thumbs down. How is that all working? If you can share a little bit about what that looks like.
So it's as simple as you saw. We have there's a couple of platforms that support this. We have it on Rhythmic, which is my preferred feed, and on CQG, and you'll have a universe of strikes for different products, and you can go in and select where you think, we're not really. When you're looking at these, you're not really interested in where the market actually is trading currently. You're more interested in where you think it's likely to close. And so you're looking for the strike where you think it's going to close. Then you're checking for what will it cost you to vote yes or no. You can say, nope, it's likely to close below 3,600 right now. And that'll have some intrinsic value in it. And you'll pay a price, and if it falls below 3,600, you make money. If it doesn't, it expires worthless, and that's really it. One nuance you want to recognize is I choose the 3,600 strike, and the market settles at 3,600. Who wins? The put wins. In other words, the people who voted it's going to close below, they're the ones who win. In order to get paid on the thumbs up, it has to be at least a tick higher. So even if you chose 3,600, if it closes at 3,600, you should know that you can't have both of them win because they're both right. So traditionally, it is the put that actually wins. in that situation. So that's a little nuance that you need to know about these.
That's a good to know, right? That's for all the people out there where it settles exactly at the tick, just so you're aware.
Yeah,
Cool. We already talked about this as well, so I think I'm going to skip over it. But the markets that are covered, right? You've got all the major CME markets: ES, NQ, Russell, Dow. You've got the 6E, crude oil, gold, right?
natural gas,
Nat
silver,
gas.
copper.
Yep. Yep.
Those are the launch markets. The CME will most likely add to these based on the success or the demand. Maybe they'll add, treasuries to this. Who knows? But this, I got to tell you that if they kept it here, I think I have plenty to work with. There's a lot to cover here.
Yeah, absolutely. We're kind of going in circle a little bit back here, circle back. But what is your approach to trading these outside of, if you were to go trade this yourself outside of our Polling for Charity program? What would be your approach? Would you do your pre-market analysis and make an opinion there, or are you doing what you said earlier, which is kind of watching throughout the day and maybe grabbing one of them?
Well, I have to base the trade on something that I can substantiate. So, my approach to these, those of you who have traded the way I trade and maybe are within convergent trading, you can go check that out, convergenttrading.com. We talk about these historical volatility or the close to close sigma bands. So we can do a statistical or quantitative analysis of, given today's close, what is the probability, the historical probability, not the future probability, but the historical probability of the market closing within this range? What is the probability of it closing outside of that? So that would be the first step for me. I'll tell you what those are for today, for example. For today, the S&P, it would be normal for the S&P to close anywhere between 35.85 and the upper band is, where the heck is the upper band? And 37.17. Very wide range because of the recent volatility. We have a relatively wide range. So anything within there is very possible. So that's a lot of strike prices. Where this gets incredibly interesting and where I will log into the events webpage and start taking positions is on days where it starts to move multiple times the normal range, and I'll start to look for an advantageous position for the market to collapse back into what I would consider to be the normal range at the close, because I'm measuring movement close to close and I'm running historical analysis on it. That would be the first step. So if I see that we are gapping up, for example, and like we did last week, we gap up in the S&P pretty big, and we're already pushing these really far out bands, I'm going to be voting down and looking for strike across several strike prices so I can spread my risk around, voting down on several strike prices with where I would expect the market to collapse back to its historical range. And if it doesn't, it doesn't. But it's a worthwhile bet, because when I'm taking that trade, chances are it's worth 25 cents when that happens.
Yeah.
And I expect a payout of $20, and that's worth it for me. I'll take that trade all day, every day.
Sure. Yeah, that makes sense. If you can capture that move and it works out, then why not? Not indicative of future results, of course.
Yes.
So I want to get into the cost. I do see everyone's questions, by the way. We'll have some time towards the end to get to those, and we might circle back to some of these topics. But what is the cost to trade these? And I believe we have
So
a screen. I can add you back in here.
yeah, so let's look at the cost analysis of trading these. So we can only talk about the pricing here at EdgeClear. And by the way, everything I say about EdgeClear, you need to take into account that there's a material conflict of interest in that I'm the owner of EdgeClear, and I represent my own trading plus EdgeClear's interests in my comments. The commission we're charging for these is 20 cents. the exchange is waiving exchange fees through at least Q1 of 2023. So these are exchange fee free through March 31st of 2023. So, but only on the out of the money, only on those trades that you take that settle worthless. There will be no exchange fee. Now, if they settle in the money, the exchange fee is 40 cents. So what we did here is we did this spreadsheet. Let me zoom in a little bit because it looks really small on the screen here. For those people who are getting older like me, more mature, respected members of society, don't talk about my age. So if we look at this, essentially what this looks like, we ran it across what happens if I traded 20 contracts, okay? And none of them are in the money. 10 of the 20 are in the money. 15 of the 20 are in the money, and 20 out of 20 are in the money, okay? And we looked at the cost with EdgeClear's fees, which involves clearing and so on. All-in cost, if none of them hit, this is 20 contracts, if none of them hit, the cost is $4.40, as an example. If half of those hit, the cost is $8.40. If none of them hit, the max potential gain is zero. None of them hit, right? So you end up paying fees, which for 20 contracts isn't bad, right? $4.40.
Right.
If 10 of them hit, that means you're getting at least the maximum potential profit in this case is $19.75 because you will have paid 25 cents to participate. That's the next tick for you to hit or lift.
And that's a maximum potential because this is assuming that you're getting something that is at the lowest price, right? So
Yeah,
whatever you paid can affect that, but
right. It's like you just hit a thumbs up on a 3,700 strike. The market's trading at 3,600 or something, and it ends up rallying and finishing there. Your maximum potential gain is $197.50 minus the fees of $8.40 because now you're paying exchange fees, NFA fees, and commissions on 10 of those. It comes out to $189, which is about 4% of your total cost will be in the fees to participate. The next example is, again, 20 contracts, 15 of those strike. Now the max potential is $296.25 after fees. $285.85 go into your pockets maximum. And then if all 20 hit, then your max potential is $395, right? So it's $19.75 times 20. And then the fees will be $12. So you end up with $383 in your pocket. So the fees for these, especially the exchange not participating in contracts that are out of the money, makes these very low cost, in my opinion. I feel like a lot of, I've been around for a long time and I've been online for a long time. I feel like most people don't have their risk reward planned for products that they've been watching for years. And the reason I'm participating in this program and I want to bring it to market and I want traders to at least have a look at it, the reason I do is because this does some of the work for you. You know what your risk is before you enter because it's on the screen. So your plan is a lot easier and there isn't any leverage where you may put an order out there, leave, not realize it, and all of a sudden lose your entire account. There's very, very low probability of that.
Yeah, and that brings up a question that several audience members have asked, which is, and I believe you might have the answer to this, is there a max amount that I can put on? Can I go in and throw 500 of these on if I wanted to? Not that I have that kind of capital lying around, but
because it's a cash-based product, now I can't answer this authoritatively because I have not seen the answer to that question. I asked that myself. But there's really no reason to limit these since they're not a leveraged product. So to me, it's like buying a call or a put option. Really, with most brokerages, when you buy a call or a put option, buy a call, meaning getting long only, not short. It's limited by the cash value in your account. As long as
Yep.
you can pay that the fee and the commissions involved, you're able to participate at whatever level or in how many ever contracts you want. But like everything else, you never want to risk more on a single trade than your account can bear, right? You want the ability, the common sense, the reasonable business of trading dictates that you want to keep each trade to a very minimal amount relative to your account. But on any given day, if I lose on all of them and I only give away 2% of my account, depending on the size of your account, that could be, 500 of these because they're a
Right.
cash-based product. So it's not limited by the exchange at the moment, as far as I can tell. But we'll ask and see if we can get an answer. But I don't believe there's a limit at the moment.
Yeah. Now you're talking about the exchange fee on the settlement. That brings up a question that I'm curious about as well. Can I day trade these or can I scalp them? So if I don't want to pay that exchange fee on my settlement, I want to cash out at 18 bucks, right? Can I do that?
You can. It's really not in your best interest. You can certainly, even with the Rhythmic platform, you can hit a thumbs up, hold the trade, have it go twice. Like you might have bought it for 50 cents, it's at $1. You can go and close it when your money has been doubled. But at some point, because the max potential profit is $20 on these, after a while, you have to overcome. It makes it more difficult to overcome the fees in that case. I mean, you can certainly scalp these 100% for sure. But is it a prudent thing to do? It really is a personal thing. Do you want to keep going in and out, or do you have an opinion of a certain closing price and you're going to stick to that opinion until it settles?
Yep. Yep. Interesting question here. Same deal. We're going to stick with this page for a moment. Someone said, so you don't lose more than what you pay up front in fees before you click the up or down. So in theory, if you're buying something that's valued, you're paying 25 cents to potentially collect the 1975 less fees. I think this is your question. Uh, then I guess, yes, in theory, you could pay more in fees. But even then, no, because if it didn't settle in the money, you would only be paying the commission per contract. So hopefully that answers that question for
Yeah, I
somebody.
mean, the max money that you can lose on these is $20 plus the fee
Right.
per contract. Because you can, in fact, buy something for $20 because it's in the money, and it falls out of the money, it becomes worthless at close, and there that goes. So it's still a defined amount of risk. It's still acceptable risk, $20 on an event that you believe you did the homework on.
Right. 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 So let's see here. I've got one more question for you, or maybe not. We can start to get to some audience questions actually, and then we'll circle back for everybody on the Pulling for Charity event as well, and where you can get a look at a demo and take a look at these in more detail. But I do want to get to a couple of other audience questions, if that's all right with you, Morad.
Yeah, go for it. It's about time to cover some of those questions.
Cool. So, a couple of questions here that I can probably handle, or you can take if you want. A couple on taxes. So, how these are handled as far as tax implications? These are traded through the CME. So, as far as I know, you're getting your 1099, and it's taxed as futures profits or losses are taxed.
Yeah, I mean, you're at the end of the day, the underlying product, which is what your tax is going to be based on, is a long call option or a long put option. That's our understanding. But please understand your tax situation and your tax treatment is something you'd want to discuss with a competent accountant. We're not accountants and we're not lawyers, so we don't know exactly how certain jurisdictions would treat these. But At the end of the day, you're trading a derivative, and that's the underlying, and so they're probably going to be treated with the same favorable tax treatment, the 60/40 rule, and things like that. But I don't think we're qualified to give a definitive answer. This is just an opinion.
Yeah, just an opinion. I am not a CPA or anything like that, so don't don't grill me too hard on that stuff. Someone asked, "Is there? How are these margined?" There's no margin; it's cash value. So, if you have $1,000 in an account and you want to go throw on, a couple hundred, you could. It just depends on your risk reward profile there. So I'll take that one. Let's see here. For the charity challenge, can you submit opinions for just some of the markets you're asking about? Or can you do all of the ones you're asking? I think that you had them on that page. So we're going to cover what, 5 or 6 in the polling for charity?
We're going to look to put on 5 trades in each session, hopefully, if they meet the requirements. Should you vote on ones that you don't trade, I would like you to, the more participants that vote. But if you're throwing on a vote on a coin toss, like, today I feel like it's a yes or a no, then it's probably not going to help. Because at the end of the day, we are looking to grow this account. And so if you feel like your opinion is random, then don't vote. But my preference is that you look at these products, which should broaden your horizons as a trader, and to vote on all 5 products. But if you feel that your vote is really not educated or is just a guess, then you can just refrain from voting.
There you go. Cool. There's a couple in here, Morad. I'll let you maybe address these about how these are priced. So obviously everything has buyer seller. If you want to get, maybe if you could touch on that at all.
So how are these priced in terms of fees, which are on your screen, or how are they
I believe
priced
they're
in
talking
terms
how the
of?
strikes are priced. So who's determining that I'm paying $1.25 for that to potentially make 18.75?
It's just like every product that the CME puts out. There are a bunch of market making firms, like the Virtues and Citadels of the world. Who I don't know who the market makers are, but I'm sure there are machines out there that are arbitraging the price of these versus the underlying asset to keep a tight market and to keep them correlated. So, how these are priced, I'm not privy to that, but in general, you're essentially there's got to be a seller to these options, and so the sellers of these options are people who are trading that particular option or the market makers themselves.
Yeah. Let's see. I don't really understand this particular question. Sorry, I'm gonna maybe have to skip that one, Darren. The next one we got: do we need a separate account to trade these from our existing future account slash data feeds? Uh, Probably not. If you have an account with EdgeClear, contact your broker, and we can help you get set up. At the moment, it's on Rhythmic. So if you have a Rhythmic account, very easy. We can get you enabled to be able to trade these.
Yeah, you don't have to set up a separate sub account unless you feel like you need to track these separately. In general, you could trade these in your existing account. The prop account for EdgeClear can trade these or any other CME product that's available. So, as long as you have a balance in your account, then you should be able to trade them in that account. And as long as you have a data feed for the exchange that you're trading these on, then you should be able to see the data and put the trades on. So you don't. There's nothing special. There's nothing more to this. At least with EdgeClear, I can't speak for what everybody else is doing. Nothing more to this than reaching out to your broker and telling them to enable the event contracts, and off you go.
Yep. Yep. Similar question: will these be available within Edge Pro X? Obviously, this is more Edge Clear specific stuff for you other listeners who reach out to me if you're interested. But no, not at the moment. You could view them in Edge Pro X, but the trading actually is done through Rhythmics. If you go to itrade.events right here, Morad showing the screen, you'll be able to see the interface. But if you have the Rhythmic data feed, then you can trade those markets as long as you're enabled.
Yeah, these are much, much simpler than what you would have coming into Edge Pro X, which is has a lot of complicated features to it. You can easily log into the actual, like this is supported on CQG as well, and you just log into a web interface or mobile and just click, and there you have it. It isn't necessary to trade these from a full-blown trading platform.
Absolutely. Run through it one more time. I think we're at the end. You guys can float out more questions if you have them, but I think we covered most. And sorry if I didn't get to them. Reach out to us if I did not get to your question. But I think it's time we just recap the polling for charity, how everyone can participate. And that's this page. I'll throw up the URL here.
Yeah, so on tomorrow morning, this starts. If you want details, just go to edgeclear.com/event-contract-poll, and you'll get all of the details of what we're doing there. The voting button is right on the screen. You can switch over and vote. We'll have the new strikes running, and you can vote. The voting, please remember, the voting occurs within a very tight time frame, right? So we're not going to open up voting at 6 p.m. the prior night, because there's so much time that can go by and so much can happen by the time we want to put this trade on. At the end of the day, you, and I'm going to want to say this clearly, you are trading our account. Your vote is, you're getting a voice in how our account, which is trading live money with live fees, you get to decide how this account grows. So we're opening the voting at 9 a.m. Eastern Time, which is when the Trader Bite's going. I'm going to cover the normal stuff I cover in the Trader Bite, actually an abridged version, and then we're going to look at the votes. If we have 200 votes plus, at that point, then we pull up Rhythmic and we put the trades on, and that is that. As soon as we have 200 votes, we're putting the trade on. So vote early. But the voting, no matter what, closes at 9:30, and whatever result we have at that point that meets the rules, meaning a good risk reward, I'll just go in, click, 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 and put those trades on, and we'll report back on a weekly basis how the account is doing. Recognize also that EdgeClear is a professional trading firm, so we have to pay the higher CME data fees. It's $125, I believe, per exchange to get real data to be able to trade this. So we have a lot to overcome. So we want to trade a whole lot of these, and we'll keep doing this all the way till the last trading day of December.
Awesome. And that starts tomorrow, right?
That starts tomorrow. So be there tomorrow at 9 a.m. The Trader Bite, by the way, if you're looking to find that, the link for that is TraderBite, BITE.live. And that'll drop you right into that page, and you can watch that day's Trader Bite and participate.
Yep. And I've put the URL up for everybody, the shortened version down here at the bottom. So you can also go to that page and you'll be able to take a look at everything, vote, all of that. I'm sure Morad will have something on the Trader Bite for you all as well. Anything else, Morad?
No, that's it. I think this is another win, in my opinion. I know there are some strong opinions against these out there, which I was not able to substantiate. I don't understand why some have an issue with the ability to trade futures, to have an opinion on futures, but use cash for that. I feel like this is a lower risk way to participate in the markets. The fact that you can do this based on an opinion that you have or a prediction that you have, and it's accessible on your mobile device or on your desktop web browser, just makes it easy. It takes the sophistication away. But overall, I'm excited. I think this is another asset for retail traders or online traders to participate in the market without the risk of being stopped out before their position is shown to be correct, with the risk reward clearly defined, and with the inability in most cases to lose more than the $20 that are at risk here. I think this is just a way to trade more intelligently. And of course, you can take as many of these as you want, but the same process applies. Create a plan and participate in these. I'm very, very interested in how we do for the Polling for Charity Challenge. And, you know, I'm a big proponent of charity, and I hope you'll participate and help us grow this account.
Yeah, absolutely. I just want to throw it out there one more time. It's an awesome cause. I'm really glad we're doing it, and we do need 200 votes. So, everyone who's watching, make sure you participate. It's pretty easy. You're making a vote on 5 different things. So get involved, and that's all I have. Morad, thank you as always.
Thanks for having me. Take care.
Of course. All right, everyone. Enjoy the
See you,
rest of your
everyone.
days.
Take care.